Hi ladies and gentlemen, welcome to part 2 of IFRS 18 fair value measurement. So we've already done part 1, which talks to the definition of fair value, and we'll try to break down that definition of fair value into its different components and apply each of the components. Now part 2 of this video class is now focusing on specific assets which we want to determine fair value on. And we want to focus mainly on assets which are non-monetary in nature. So when we talk about non-monetary assets, we're talking about assets which are not money. So for example, this table, this laptop, this pen, this pointer, this building. So those are non-monetary assets. How do you obtain a fair value for a non-monetary asset? Now the reason why this has been separated and put on the side is, remember when we talked about fair value, we talked about there should be a market which should be there. And we said the market which you need to pick your price from is supposed to be the principal market, which is the market which has got the greatest volume of activities, or the greatest number or greatest level of activity of that transaction. But when you look at non-monetary assets, if I've used this laptop for 2.5 years, this laptop it's now a second hand. So it has lost value. Now, do we have a market which trades exactly the same type of laptop which has been used for 2.5 years actively? Do we have a market which has got the greatest volume of assets, of laptops which are now second hand? You may realize that we may not have. The greatest market which we have may be for new laptops, not for used ones. So for non-monetary assets, it's always difficult to find a principal market. Also, when you look at monetary assets are a bit easier because there's always most of the times there's a market which there's a great volume of transactions in which it will be circulating. Okay. So non-monetary assets. So for non-monetary assets, we jump to paragraph 27. That is the key paragraph that you want to apply here. So when we talk about non-monetary asset, the thing that you need to take into mind is the moment it becomes non-monetary, principal market becomes difficult to obtain. So for non-monetary asset, paragraph 27 allows you to move away from the principal market and you go to the highest and best use. So which market gives you the highest and best use for that particular asset? Because that's the market which gives you the greatest benefit, which you need to consider. So highest and best use is always key when you're considering the fair value of non-monetary asset. Now remember, we talked about it in part 1 that when you're talking about fair value, it's a price which is based on market participants. It's not an individual assessment. It's not an individual concern that you have in consideration which you make. Which means when it comes to highest and best use, we are not talking about the highest and best use of that asset in a certain entity, but we're talking about the highest and best use which the market can apply to that particular asset. So for example, I may have the building which I am in right now. This building, I can use it for lectures. I can use it for video productions. I can use it as well for nursery. So the question is, if this building can be used for all those uses, which use gives the highest benefit? So let's say the highest benefit may be using this building as a nursery, but I don't have an intention to use it as a nursery. Does it mean that I do not consider the nursery value? So market participants will say, use this building for nursery. So we take what the market participants say, which means I will take the value from using the asset as a nursery, not for video productions like what I'm doing right now. Okay. So that becomes what we consider. Now, as you come up with the highest and best use, there are certain things that you need to consider, certain considerations that you need to factor in. Number one is, we talked about this building can be used as a nursery, it can be used for video productions, it can be used for classes. But for me to pick the value from any of these uses, I need, number one, to consider if I'm legally permitted to actually use that building in a certain way. So for example, we may agree that the greatest value of using this building is to convert it into a greenhouse in which we grow we grow marijuana, and we make huge profits, or we may process drugs from this room, we make huge profits. That's the greatest use. But is it legally permissible to do that? No. So the moment it's not legally permissible, that manner of use is taken out of fair value. It's no longer considered to be a use which we should consider to come up with fair value. Then number two, I should also consider if it's physically possible to actually use that building in that manner intended. For example, we may say that this building will derive its greatest benefits if we use it as a hospital. But when we look at the structures of this building, it's not possible for us to convert this building into a hospital because it does not meet the necessary standards for hospitals, which means it's not physically permissible, physically possible to use this building as a hospital. So the fair value which is determined based on that manner of use is taken out. We'll no longer consider it. And number three, you should also look at if it's financially feasible to actually use that building in that certain way. So for example, we may want to use this building to use it as a warehouse, as a factory, but we are specifically producing biochemicals. Now we look at, is it possible for us to actually do the renovations to this building which are required to meet the standards for manufacturing of biochemicals? If it's financially out of reach for us, then we do not consider that manner of use. So each time you're considering highest and best use, those uses which you want to consider should tick certain boxes, which are, is it legally permissible for me to use it that way? Is it physically possible for me to use it that way? And is it financially permissible for me to actually convert that building to use it that way? Let's do a small example. So this is an example which is coming from a 2016 paper for level 2, which has got this investment property. So it says investment property is an office building which is in Chegutu, which Hoppers acquired for rental purposes on 1 January 2015 at a cost of 440,000. So the subsequent measurement policy which is being applied by Hoppers is they want to measure this building, this investment property, at fair value. So we need to determine the fair value at the end of the year so that we do the fair value adjustment. So land and buildings are revalued by a sworn valuer at the end of the year. The valuation report had the following values based on the different ways in which Hoppers could benefit from the asset. So number one, since it's an investment property, it's land and buildings, it's a non-monetary asset. The moment it's a non-monetary asset, we need to consider the highest and best use. And we have been given a number of values which we have over here. And these are based on certain manner of use. And the first one is, we can actually sell this building. If we sell this building, we'll get 740,000 in 2017 and we'll get 580,000 in 2018 and 2016. Then we can actually use this building as an office building and not rent it out the way we're doing. If we decide to use it as an office building, that means it's owner occupied, we'll derive a value of 650,000 in 2017 and 600,000 in 2016. Or we may use it as residential, we continue to rent it out. So if we continue to rent it out, but as on a residential use basis, we'll get value to the extent of 800,000. And in 2017, and we get value to the extent of 620,000 in 2016. So the question is, in 2016, which one is fair value? And we'll go and tick on the highest and best use. And the highest and best use in this case is residential, which is giving us 620,000. And in 2017, the highest and best use remains residential, which is at 800,000. But before we pick residential as the manner which we're going to derive our fair value, we need to consider those three conditions. Number one, are we legally permitted to use this building for residential purposes, for domestic residential purposes? Number two, is it physically possible for us to actually use this building for residential purposes, considering that at the moment the investment property is rented out as office buildings, not as residential, which means we will need to convert those offices into sections which are habitable for residential purposes. Is that possible? And number three, we need to consider if it's financially feasible to convert this office building into a residential. So it says here, number one, it's physically possible. So physical possibility, tick. Then it says it's legally permissible to use the building for residential purposes. So legally permissible, tick. How about financially feasible? The extra cost of converting the office building to residential property are insignificant. So it's also financially feasible. But the report noted that the area which the plot is located was designated or disallowed for residential accommodation by the municipality at the beginning of 2016. Which means when we come here, when we look at the municipality is saying you are not allowed to use this building for residential purposes, which means we cannot derive our fair value based on this, because this is not permitted by the municipality in that land. Which means our fair value can only be considered from a point of view of selling it or from the point of view of using it as an office building. So given this, that means our fair value now in 2016 becomes 680,000, the highest. And in 2017, it becomes 740,000, the highest. So that is how, ladies and gentlemen, we use the concept of highest and best use for non-monetary assets. Thank you. So what we're going to do now is we're going to go to part 3. Part 3 will basically focus on the methods of fair valuation which we have, as well as how do we disclose that fair valuation. Thank you very much.